All right, so that's views coming across on asset classes. Matt Orton is Chief Market Strategist at Raymond James Investment Management. He's joining us now to take some questions. Matt, good to have you with us here. Thank you very much. Have you been following the entire Adani saga here out of India, Matt? And I don't know if you
Hey,
have
good
any
morning,
thoughts on
everyone.
the subject. Yes.
Yeah, I have been following just because the Adani Group makes up a fairly large weight within the index, and I think it's one of the reasons we've seen underperformance. And there's been a narrative, I think, that's being spun amongst global investors that they're equating the success of the Adani Group really to the success of the Indian market. And I think that's been one of the reasons why there's been pressure. There's been outflows from a lot of international investors just leaving the Indian markets broadly, profit taking because of the strong performance you had last year. So all of that is culminating into some more challenging performance. It's been a bigger underperformer within the emerging market indices. But at the end of the day, I don't think Indian markets can be fully equated with the Adani Group. Sure, there's certainly questions that need to be answered because of the Hindenburg report, but I wouldn't be chasing the stocks. I wouldn't be trying to catch a falling knife at this point, but it's so critical to the budget that was just released in India. It's critical to airports, to ports, to rails, to road construction. I can't see it being an institution that's going to go down. And at the end of the day, I think we wait for the news flow to settle, and then there's going to be opportunities. So, India's been an area that I had liked a lot. I'm marginally less positive in the near term on Indian equities. But that being said, there's plenty of opportunities. Areas we've liked, information technology has continued to perform well. And I think it just highlights more of a global narrative that I've been saying to a lot of our clients, which is even though there's a lot of good news in the market, more broadly speaking, maybe outside of India right now, don't be chasing the market higher. Don't be feeding into some of the narratives and selling out of winners in the past. Just wait and see. Let some of the news settle and remain just a little bit more defensive for the time being.
Hi, Matt. Morning. We are getting a little bit worried, a little uncomfortable. Everyone's talking about 2023 starting off in style for global equities. Unfortunately, the Indian markets, after a very good 2022, we're underperforming a little bit, just to a little slow off the blocks, I would say. But as you said, you're quite positive on the Indian markets, but in the near term, you could be a little skittish, maybe because of valuations. If you see a bit of a correction, would you then be more positive on the Indian markets? What kind of a correction would you be looking at on the Indian markets to turn it to staying positive on Indian markets?
I would. I think some of the technical levels that you were mentioning earlier this morning, I think you bear those in mind. If those technical levels break, I think it becomes incrementally more attractive because at the end of the day, India is one of the fastest growing global economies with a very, very aggressive budget, with strong investment into the country, and with good GDP growth. So at the end of the day, the overall narrative still plays out. And there's a lot of companies with the possibility for margin expansion going forward. And that's what I want to see, the ability to grow earnings and have stable earnings. And I think there's a lot of good companies. So I think as the Indian market continues to go down, short of an uncontrolled downward spiral, if we correct 5% or so, I think it becomes more attractive to start dipping your toes. But I want to see where the news settles on all of these stories, and I want to make sure that there's not going to be any more incremental negative news coming out. I think you don't want to front run the news cycle.
Fair enough, Matt. So you're waiting for the news flow to abate. I think so are a lot of investors. But well, the news mill keeps on churning and moving forward, so much of news flow. But I want to come back to another point. I'm not sure if you're investing in China. If you're not putting more money to work in India as of now, where are you taking your money? And specifically, my question is to China. We know there's a lot of money that market has been attracting for obvious reasons. But is that just a tactical shift? Or is it sort of a re-rating which will play out, which means we'll constantly have to compete for attention vis-a-vis China?
So India, one of the attractive points of India, especially for global investors, was that it was an alternative to China, especially when China shut itself down for 3 years. And the Indian economy broadly remained open. That was a great alternative to China. The issue with China right now is regulatory crackdowns on companies. We've seen full-scale reversals of COVID policy. You've seen reversals with respect to some of the mega communication services and technology companies in China. And the big question is whether or not that can be trusted. So as I look at the emerging market complex, China versus India. I actually think the China reopening story is a great one, but you can lean into it without having to just own China. I think China's overbought in the near term. There are issues, but look at some of the other Asian emerging market countries like the Philippines, which has been an outperformer, Thailand, South Korea, and Taiwan, which are large semiconductor areas, and the market is becoming much more optimistic there. So I think you want to lean into the China reopening story, but you can do so by finding other countries that don't have those regulatory risks, that still have solid growth and are going to benefit from China reopening and more global trade.
All right, Matt, thanks very much. Great speaking with you. Appreciate you joining in with that perspective. We'll take a quick commercial break here, and we'll come back with a focus on stocks. Our top stocks, which our research team gets to you every day. That's lined up when we return in just a bit.